Guessing you're familiar with investing in apartments. So
A
let's
little
say
bit.
you're going to put, I'm going to put $100,000 with you, and you're buying something at an 80% occupancy.
Yep.
And as part of that deal, we're going to take it down to a 60% occupancy, and the NOI is going to roughly drop in half, the net operating income. So the apartment's value on paper drops in half.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Keith Blackborg is a CPA, a proud father, a husband, a wealth optimizer, and tax strategist, made wealth a business, and reached work optional by age 30. Keith, welcome to the show.
Thanks so much for having me, Sam.
Absolutely, Keith. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
Great question. I started off San Francisco, California, realizing in corporate accounting for Deloitte that this is not what I wanted to do for the rest of my life. Moved to Texas. It was 2010. There was apparently a great time to start buying rental houses. So I started off, my wife was working in the real estate education group, ended up taking over a real estate business. 2010, I started a CPA firm focused on high net worth real estate investors. If somebody's a guru or a well-known person in the Dallas area, there's a good chance they're a former client of mine. Grew that up. 2013, we switched to commercial real estate syndication, active and passive investments in apartments and hotels. 2016, fast forward, a few things happened. One, I had a business that was doing great from the external perspective. On the inside, my marriage was a wreck. I was on the brink of divorce, and I knew some things had to change.
Wow.
So I went from that I thought, also around that time, I thought Hillary Clinton was going to get elected and the real estate market was going to crash. I was wrong, but I ended up exiting out of our commercial real estate syndications, sold the CPA firm, and then just spent the next 3 years traveling the world. And so we had fun, a lot of healing, reconciliation. There's just some really great things that came out of it. But life can really take over. Business can take over if you want to. And that's why anytime thing going forward, it really had to be about life. It couldn't just be about the business. Fast forward to 2019, I got the best souvenir I could have ever had from our travels. And that was our firstborn son. He's now a 3-year-old. And I now have a 9-month-old along the way, or that's been born. Kids have humbled us, so no more kids for us, since that's as much as we can handle, but we're so grateful that we have that. In 2019, I started Financial Journey, which is really about helping a community build wealth, get freedom. If you already have a 3 to 20 million plus net worth, if you can live off 5 to 10% of whatever your net worth is, then you're the ideal person for me to help you make work optional within 3 to 5 years by showing you the right wealth, investment strategies, etc. It's fun for me. I still get to talk wealth and taxes, but it's more than that. It's about having life, having fun, and enjoying the journey.
Man, that is really cool. I like that. I mean, that's a very colorful journey, because you started off in corporate accounting, and then you saw the value of commercial real estate. You said, "Hey, we're going to go long in that. We're doing active syndications. We're passive and active syndications." You went long in that, so you understand that, I think, really well. The value of creating income producing assets. So you got experience on the corporate accounting side, on the accounting side. And then you took 3 years off, which is awesome too. We could probably spend the rest of the show just telling all the cool places you went and saw over the course of 3 years. 2019 comes around though, and you say, "Hey, look, I see an opportunity, to really, I guess, take the high net worth individual and become a tax strategist for them." How do you build a company around that? How do you hang out a shingle and let people know that you think you've got something and you can help them?
Well, I don't fit in any box clearly well. I'm in some ways, some people try and describe myself as a financial advisor. If I had the licensure as a financial advisor, I could not talk to people about all the alternative investments. I'd be stuck, limited to selling you stocks and bonds and other traditional investments, and I would be worth a lot less. My advice would be worth a lot less. And so instead, as a CPA, I get to still talk a certain amount about taxes, about investments, but it's worth so much more than that. I love finding ways to really integrate, synergize, optimize your wealth, your taxes, your life. It's all got to start with what you want, and then we reverse engineer the wealth that goes around that.
That's really, really fascinating. What are the common problems that you're solving when someone comes to you and they say, "Hey, I need a tax strategist"? By the time you have reached the $3 to $20 million net worth, you've done something right already in life. What do you do differently, maybe, that the other advisors, strategists, CPAs, people who have not done for them previously?
So as a wealth optimizer, one, I've got a full view of how everything looks. So I officed with syndication attorneys for 5 years. I'm not an attorney, but I know a lot about areas that a lot of attorneys don't know. And so when it comes to one independent person who can stand back and look at all the stuff you have going on, wealth, taxes, insurance, risks, life, and really help be that independent voice that's not really trying to sell anything. It's just a fixed monthly fee that we work together for. And it means that you've got an independent advisor who can help you through all this. That's invaluable for a lot of people to have, and somebody who truly knows more than, well, at least in taxes and wealth, more than many of the professionals. I'm not trying to get too high and mighty. I've just seen a lot. I love learning. I love exploring, and new strategies are like my favorite thing to do. I just geek out on so much. And then I love to take the complex stuff and how do we make it actionable and simple? I speak the technical language and the people language too.
Yeah, and you've spent plenty of time in the private placement world to understand, how those deals function as well. Which, I mean, a lot of times your strategists don't. They may have a cursory understanding of it, but they haven't been in the weeds in it, maybe like you have.
Yeah. If I want to make as much money as possible, I go back to commercial real estate syndication. My mission is, it's not just, it can't be about the money more for me. Given the little bit of my story I shared, it's got to be about helping other people live their life and get the most out of what they have. I know it sounds altruistic, but it's genuinely what I love and value.
Right. Tell me about the new, and that's great. I love that. I mean, there's so many people that don't honor what it is that feeds their soul, and it sounds like you found a way to do that, and so that's really cool. I love that. Tell me this. You said you love working on the newest strategies, the newest ways of getting things done. I think the words you use where you geek out on it. When you say that, what are some things that come to mind?
Oh, we've got one that we're doing in our community right now. So guessing you're familiar with investing in apartments. So let's say you're going to put, I'm going to put $100,000 with you, and you're buying something at an 80% occupancy.
Yep.
And as part of that deal, we're going to take it down to a 60% occupancy, and the NOI is going to roughly drop in half, the net operating income. So the apartment's value on paper drops in half. So let's say I did that investment with pre-tax traditional 401k money. I get an independent valuation done when the occupancy is dropped. And now that investment, at least on paper, is only worth $50,000. So I do a rollover of the $50,000 asset valuation from my traditional account to my Roth account. And because I've invested with you, 3 years later, it pops up to being worth $200,000, but all within a Roth account. So if we were to back that up, we got a $100,000 tax deduction for putting it into the traditional account. We offset that with $50,000 worth of taxable income. And then we've got $200,000 that's never taxed again in your life, potentially worth millions of dollars over the course of your life if you're not never paying taxes on that.
That's next level strategy that you don't hear a lot of those you just don't hear much about that sort of thing. How complicated is that, and what sort of risks are involved in implementing a strategy like that?
So for you as the individual, very, very little effort for you. In our community, the way it works, it's just something that gets included as the package. As a syndicator, if you like to syndicate deals, you're probably don't mind spending $3,000 to $5,000 on getting the valuation done. And then if you're able to attract additional funds because more people want to invest with you because they can do a discounted rollover, that's a huge value add for both you and your community. And so it's simply a matter of people put in their money. They've got to have their money in some sort of a self-directed account. I like solo401k.com is who I worked with a lot in the past. They've got really favorable fee structure and you can self-direct it. They put the money in. I show them the valuation done by a third party. They get the 1099 done. If we get audited, you've got the independent tax professional who can go back and prove out the audit, prove out the valuation. But beyond that, now you've got the money in the Roth and you're kind of set. So I've got technical guides and stuff to back all that, but that's a simple version.
I love it. That's cool. You mentioned you quote your community several times. What is that?
So initially, when I first started, it was all about me, my knowledge, my expertise. When you develop a group of people together and you see how much knowledge, I've got people with over $1 billion worth of real estate in the group. I've got others, doctors, surgeons, all sorts of people that are all different places. So from the small to the really large, but everybody together, there's a common theme of life and wanting more of that. And when you get a generous group of people who are willing to help each other, it's not about me anymore. It's about unlocking the community or finding the right person to talk to, whatever it is. So now I don't have to know everything. It's just about highlighting the person with the experience and skills in whatever you need help with. And so a lot of our community events are now about connecting people together in different ways and very intentionally. And so it's now my mission to unlock the knowledge already within the community. And it is just so much more powerful. People get what they need when they need it from each other. And it's just a very fulfilling environment when you go from in a community event to actually it's nurturing versus you've probably been to an event where there's none of that and it can be life-sucking where you're done within a couple hours.
For sure. For sure. Was this a community that you built specifically around your kind of tax strategy? Okay. Tell me, for listeners are curious.
So you say tax strategy, that's probably about 5 to 10% of what I do. So tax strategy is important, but there's the wealth, the life, there's all that stuff that goes beyond that, the legal, the entities, traveling together. We got a family trip to the Caribbean here in May. So it's, you maybe even heard Go Abundance, but deeper than that.
Got it. This is awesome. How did you build this community? What were some actionable steps you took? If there's somebody out there that has, the desire and the capacity to build a community around whatever it is that they're trying to build it around, how did you do it? And what would you recommend someone do?
I think you start with what it is that you and your family want. What it is goes back to that center. For us, when we were traveling the world, it was very lonely to travel by ourselves. So the selfish part of me was like, hey, I'd like some friends to be able to travel with, other people that can do this with. Selfishly, I also like sharing wealth and taxes, and Uber drivers can only accept so much of that. And so this for me was a format where it was no longer about the money. It was more about how do I help and serve others? And that was a paradigm shift for me. And so initially it was just started with me sharing, giving stuff away for free. And in time it was like, I can make a business out of it. I can grow this and let's have some fun along the way. So I've got my parameters on when I'm going to work or not going to work. But within that, I'm going to go as fast as I can as a racehorse around the track to get stuff done because that's me. That's my personality. I enjoy it. But then at the end of the day, I'm going to come back, connect with my wife at around 5 p.m. and we're going to go do something with the kids. And for me, so often balance is not something built because you have balance. Out of imbalance and focusing on different things is how we came together and what feels like a more balanced life today.
Got it. That is really, really cool. I love that. Yeah, the ability to find balance in this is hyper important, man. And it's not something we can work ourselves to death if we're not absolutely careful. Let's talk a little bit about what you guys do on the kind of pre-family office stage. I know there's like this, you get to a stage where you've got enough wealth, you can really start a family office. Where is that? And then at what point does somebody in their kind of wealth journey reach out to someone like yourself? When do you recommend that happens?
So a full family office where you've got attorneys, investment professionals, accountants that work fully for you. The very beginning where it starts to make sense is a $200 million net worth.
Yeah.
And then really where you hit in your stride is 500 million. And so for me, there's a way where people kind of get lost in the middle. You're probably stuck right now in the place where you talk to the professional, to the tax professional, you talk to your legal guy, you talk to your broker, you talk to all these different guys, and you're trying to coordinate that all yourself. And you're probably not an expert in all those areas and don't even know if they're doing a good job.
Right.
So in our case, it's having somebody that can look over your shoulder and help you make those decisions or work through that, being in a community of people that is familiar with that and that is able to help guide you makes all the difference. There's a key transition most business owners make, and that is they focus on their business, they focus on their work, and they get lost in that career, that work. But somewhere along the way, maybe halfway, 2/3 of the way there, they need to focus on making wealth the business. So in the beginning, if you made $1,000, if you had $1,000 and you could earn a 20% return, that's $2,200. So not super exciting. But if you had $1 million net worth or a $10 million net worth, and with some effort, you can make a 20% return, that's $200,000 or $2 million. And often people will have these businesses that they could sell and be worth 3 to 10 million plus, but they're often only making a couple $100,000 a year, and they could do so much more if they spent even just a little bit of time optimizing their wealth situation, their wealth, their investments, their taxes, beyond a traditional financial advisor who's typically only selling you products.
Yeah, that's a painful lesson. I'm sure you've seen experience many times where you're like, you could take what you own, sell it, and then generate passively the same amount and or more income than what it is you're making right now by running that company. Like that's a hard place for a lot, especially a lot of founders, I would imagine. That's kind of like a founder's syndrome to not ever want to let go of it.
Yes, absolutely.
Okay. Wow, that's really cool, Keith. I'm enjoying learning from you. I mean, you take a really unique strategy, a really unique take on a lot of the way that people think about money, but then also think about how they organize and set up their life for success. I mean, I know you said tax strategy is only about 5 to 10% maybe of what you actually do, but I mean, there's so much involved here. I know we can't cover it here in a 20-minute show, but just knowing that there's people out there like yourself that handle these things in a really unique and fresh way, I think is really, really refreshing. So thank you for taking the time to come on the show today and share with us kind of your history, your work history, and how you've came to, it sounds like even through a period of pain and trial, that you kind of developed this whole system for yourself and for your own family first. So I think that's really cool firsthand experience. Thank you for sharing it with us. If our listeners want to get in touch with you, learn more about you and what you do, what is the best way to do that?
So you can shoot me an email at keith@financialjourney.life, but probably one of the best ways to experience what I do, to experience the community, is join for a quarterly wealth builder experience. So we just hold an event online. It's about 2 hours, as really a way for you kind of experience, to learn some things, get connected with some other successful people, and learn some tax strategies, learn some wealth strategies, some things you probably never heard of before. Like discounted rollovers. There's a lot of things that people are not familiar with. And I love just adding a ton of value. I start with giving, and then it's just kind of fun to see where people go from there in that community and how they give to each other. That's a great way to just start off and learn more where you're at and where maybe you need to go. And that experience will help you understand where you're at in that journey. Is
there a website where they can find out more or sign up for that wealth builder experience?
financialjourney.life, and then maybe we can leave a link in the show notes to the page.
Yep, so absolutely will do. financialjourney.life. If you're just listening, look that up when you get a second, but we'll also include that there in the show notes. Keith, thank you again for coming on today. I do appreciate it.
Thank you, Sam. I appreciate you having me.